Best ways to lower your monthly payment. Choosing a different loan program.
3, there could be a big difference, especially if you go with, for example, down payment assistance versus just a typical first-time homebuyer program. You're going to get a pretty significantly lower payment. Same thing with self-employment or something a little bit less popular than your FHA conventional, but it's not the most important thing because there's better ways to get a lower payment.
Buying down the rate.
2, buying down the rate is one of the best options. However, it can get pricey, especially in a market like this where you might only be in the loan for 1-2 years. You probably don't want to spend a bunch of money up front, maybe unless the seller's paying it for it.
Bigger down payment.
4, bigger down payment. The thing is, cash is king, and to drop your payment $200 or $300, the amount of money that you'd have to put down to save that $200 or $300, it's probably a better way to do it. Even if you buy down the rate, it's cheaper than putting an extra $20,000 down.
Improving credit score.
5, that's probably the least important. I know that's probably controversial, but nowadays, prior to 2008, nowadays income's more important than credit. So it's not very important. Getting your score up 20 points isn't going to make a big difference.
Seller credits.
Number 1, that's the most important, especially over the last 3 years as rates have been elevated. If you can get the seller to give you some money to help pay to buy down the rate, that's going to save you the most amount of money with keeping the most money in your pocket.